Hi everybody, today's very interesting video. The theme is crypto. The hairs are about to find out if it really was a bubble. Okay, let's start. The cryptocurrency true believers. 1 minute. Cryptocurrency true believers, Bitcoin is the ultimate store of value, the most solid hedge against the rampant inflation manufactured by reckless central banks and their money printing to skeptics. The crypto world as a whole is a mirage whose massive run up past 2 trillions was simply speculative byproduct of the extraordinary amount of easy cash that has been sloshing around in the global economy, in effect a big bubble. Both of those theories are about to face their biggest test yet. Bitcoin is the original cryptocurrency, emerged more than a decade ago of she issues of the global financial crisis as a bypass to the banks and government agencies mirrored in Wall Street great calamity at that time. In digital tokens steadily gained a following spurt of fresh of venables and endured some wild rides. But it wasn't until the next big crisis, COVID-19, the, then that the market really took off. Crypto exploded after March 2020 when the Federal Reserve and Congress unleashed trillions of dollars worth of stimulus to blunt the pandemic economic blow. A bunch of that cash made its way in digital assets, turbocharging prices. Bitcoin soared 305% in 2020 and notched another 60% the following year, topping out at a record of almost $69,000 in early November. Then thought it has been on a relentless slide, weighted down in large part by the central bank's hawkish pivot. Now, with odds raising that policymakers will commence a series of rate hikes as soon as merge, just one of several steps they are set to take in removing liquidity, it remains to be seen if the crypto ecosystem can hold up without it. It's not looking good so far. Bitcoin already down some 40% from its heights, while number two coin Ethereum, and other altcoins have also suffered steep declines. If you are going to hike rates 3 times in 2022 and keep the program and the era of low rates is over, we are going to really see how much people believe in their Bitcoin crypto thesis, said Stefan Outlet, chief executive and co-founder of crypto platform FRNT Financial Inc. I would expect that the Fed getting more and more hawkish is very bad for valuations. Um, Michael Oracle, chief market strategist at Jones Trading, agrees. The Federal Reserve's seemingly perpetual asset purchases have been the cornerstone for crypto investing, he said. Should the central bank follow the path laid out in its latest minutes release, which showed that Fed officials are prepared to move faster than expect to lift interest rates and potentially shrink the blank balance sheet. Then that would immediately undermine as the key bullish this behind Bitcoin and many other cryptos, Oracle said. For most its 13 years history, Bitcoin has enjoyed an environment of easy monetary policy and zero or negative rates. Uh, while there is no straight shot line from the Fed's coffers to Bitcoin buy orders on exchanges, there is a connection, according to David Tevel, president of ProChain Capital, a crypto hedge fund. For one, the Fed buying any type of asset can have ripple effect and lift prices of other investments. All the buying power, all the investable power that exists has to go somewhere, he said by phone. Second, with rates at rock bottom lows. Investors have been forced to scour the market to higher yielding opportunities, and money turned to crypto given its ability to post outside gains. Think of young bond investors who was accustomed to high single digit returns even on bad days, said Theo. He's going to be forced to put money into something riskier, but more importantly, something that yields something he's used to getting. So what happens when financial conditions become tired? The initial move, the opposite of what happened when they put the money in everything going to go and swing and the other way until it settles down. They will say that's why you have this immediate reaction in the market because everyone anticipating that the money is going to leave the riskier stuff. The last time the US Central Bank raised rates was in December 2018. 2018 is final increase a series of hikes. Back then, Bitcoin was trading at about $3,700, and concepts such as decentralized finance and non-fungible tokens were years away from entering the vernacular. It turned out to be a rough year for the original cryptocurrency, particularly towards the end, when Bitcoin lost more than 40%. During this last 2 months, a period that also coincided with a well point in US stocks. Funds rate. That dynamics is the dynamics is playing out again now, with Bitcoin falling in step with richly valued equities ahead of an expected new round of Fed tightening, says Peter Bookwar, Chief Investment Officer at Brickley Advisor Group and editor of the book report. So it was all. Have a good day.